Welcome to Mouse Financial and Geopolitical from a Frontier. Thank you for stopping by. I'm always grateful. I did an interview yesterday with George Durango and with Bonnie Tunya of CNBC. We actually touched on the whole Brexit issue, and the link is up on the front page of the website and on Rich Wrap-Ups if you're interested in taking a look. Brexit has destroyed $3.6 trillion in worldwide market capitalization, about 318 times Britain's EU net contribution. The pound slumped to below 132, at one point bringing its decline to more than 11% since the referendum. It subsequently had a little bounce, getting as high as 133.50. We're now just back at the 133 level. Markets in revolt are demanding action from Johnson's Brexiteer crew, and this is interesting as well. I mean, you've had no clear direction come out of the Brexiteers. You would have thought they'd be better prepared. And given the nature of the political vacuum, I just don't see how sterling, bar these odd dead cat bounces, does not go down to 125. Of course, at some point it's going to crowd in investors. It's just too cheap for everybody. But right now, you haven't got a government. You've got no one really in charge. And I think therefore sterling's path of least resistance is lower. The victory for Brexit tore through world markets on Friday, pummeling the pound and high-yielding assets, as more than $2.5 trillion was wiped from global equity values. Aftershocks of the UK's vote to leave the European Union reverberated from financial markets, across financial markets, after a weekend of political turmoil. You can say that again. With the pound extending its record sell-off and European equities dropping to levels last seen in February. The pound was the worst performing among major currencies, falling to 131.76 after Friday's 8.1% plunge. So it's at a new multi-year, 31-year low yesterday, and then has bounced to as high as 133. A decline for British banks put a measure of European lenders on course for the biggest two-way drop on record. People are finding it difficult to comprehend what Brexit implies for the future. We don't know yet what the magnitude of the shock will be. So far, in terms of sterling dollar, we've seen half the decline we're likely to see this year. Yen strengthened to 101.68, it's currently at 102.11. People's Bank of China lowered the reference rate for the yuan by 0.9%. Big losses in Italian lenders. What we know is that there will be a lot of uncertainty, and uncertainty is not welcomed by the market. Our call for no rate hike this year or next is looking more and more likely. WTI had a sharp fall, but it's recovering a little bit today. It's up about 2%. So let's keep an eye on it. I said to somebody, it's sort of unput-downable right now in the markets because things are happening. It's just extraordinary to watch. Home thoughts, nothing behind me, everything ahead of me, as is ever so on the road. Because I saw this photograph, the road to the mountain, Mount Drum, Alaska. What is that feeling when you're driving away from people and they recede on the plain till you see their specks dispersing? It's the too huge world vaulting us, and it's goodbye, but we lean forward to the next crazy adventure beneath the skies. Life should not be a journey to the grave with the intention of arriving safely in a pretty and well-preserved body, but rather to skid in a broadside in a cloud of smoke thoroughly used up, totally worn out, and loudly proclaiming, "Wow, what a ride," Hunter S. Thompson. On that note, I'll put up a photograph of myself in a Jaguar when we went to drive them in South Africa. And I must say, one more Kerouac quote. I was halfway across America at the dividing line between the east of my youth and the west of my future. Rather like the song by Solange called and Hadley Street Dreams, Sandcastle Disco. It's sort of, I don't know how to describe that music. It's very retro. Boris Johnson kept a low profile last weekend. On Saturday, he took part in a charity cricket match at the estate of Earl Spencer, brother of the late Princess Diana. Cameron heads for Last Supper with leaders amid Brexit pain. Set to face his fellow European Union leaders for the first time since triggering the political earthquake that's undermined the bloc's foundations and shocked global financial markets. Cameron will endure an awkward dinner with his EU cohorts Tuesday after his effort to calm the UK's divided public and soothe investors failed to stop the pound and the country's biggest banks from getting clobbered. We don't know how long he is going to be Prime Minister for, when a new government could begin to negotiate terms. Mark Leonard, Director of the European Council on Foreign Relations, said the rest of the EU feel they bent over backwards to accommodate Cameron over the last months, and he launched his reckless referendum and lost it, so the other EU states are in no mood to do him any favours. Let's move on. Banks got hammered by the Brexit turmoil. CDS prices and default probabilities of Deutsche Bank, Credit Suisse and company jump. Thank you, Holger. Britain's downgrade by S&P yesterday was historic. It was the first time the ratings agency has ever cut a AAA sovereign rating by 2 notches. Credit investors getting nervous on Britain. UK's 5-year default probability jumps to almost 4%. Mad world, however, 10-year gilt below 1% for the first time in its history on Brexit turmoil. Let's move on now to the currency markets. They're all over the place. I start writing this report in the morning and by the afternoon it's somewhere else entirely. The euro is at 110.62, dollar index 96.01, dollar yen 102.10. Remember, RB put the markets on notice, but I don't think the markets are listening. Swiss franc 0.9780. The pound 113.07. Aussie 0.74. Let me just take a quick peek at that. 0.7400. Indian rupee 67.875. South Korean won 11.7150. The real 339.20. Egyptian pound 8.88. And the rand 15.20.58, and you can see what's happened. There's been a bit of, I'd call it short covering, I think. Pound heads for its first post-Brexit gain. That's today. As dollar demand weakens, the pound rose for the first time since the UK's decision to leave the European Union, as a recovery in investor appetite for high-yielding assets seeped through currency markets and sapped demand for the dollar and the yen as havens. After such huge market swings since Friday, currencies are undergoing a bear market rebound, and the dollar is part of that move. There is no additional information on what will happen, so there's no change in the fundamental situation. This is just temporary, as markets are still facing the aftershocks of the Brexit outcome. I couldn't agree more. Euro dollar 110.55, but my problem with the euro now is the fact that this Brexit is a time bomb under Europe, because you get Frexit, Nexit, the whole thing could come falling apart. And therefore, I think after this initial euphoria where everyone's buying the euro against sterling, you got to sell the euro outright against the dollar. I think Japan's entire yield curve is below 0.1% for the first time on record. Have a look at the Japanese yield curve. Gold $1,313. We've come back. Remember, we crossed 1350, but we get a bit more of a virulent return in the markets, and we'll be back up there. Crude oil, about which I'm bearish, but it's had a nice bounce this morning, up about 74 ticks, but that can happen in the blink of an eye with crude oil. I'm still bearish. I think we're going back to the 45 level. What Brexit holds in store for African economies, a Q&A from Bloomberg. Quite interesting. The fallout is likely to be especially severe in Africa because the 28-nation trading bloc is by far the continent's biggest source of trade and foreign investment. Somebody else saying this is a legal, economic and constitutional nightmare for all those who have trade agreements with the EU. No one has left the EU before. We are into uncharted waters here. A quarter of sub-Saharan Africa's trade last year was with the EU, with two-way flows totaling $170.1 billion, and the UK accounting for $20.7 billion. That's data compiled by Bloomberg. If you're going to do a deal, hire people or buy new equipment, you hold off on that, said David Shapiro. It stalls economic growth as everybody just holds back, trying to find out what the next move is. Africa attracted $71.3 billion of foreign direct investment last year, down from $88.5 billion the year before. People will want to move their assets away from where they see higher level of risk. In addition to wild currency swings, jittery markets, political upheaval, businesses operating in both Africa and the UK should brace themselves for a bureaucratic nightmare. Companies exposed to the UK may have to renegotiate contracts, contend with a raft of new regulations, and face more burdensome requirements. This is the points which I made over the weekend when I said Brexit puts Africa on the back burner. Numbers show dramatic rise of terrorist attacks in Africa over the past 6 years. IHS recorded 171 militant Islamist attacks across Africa in 2009, causing 541 fatalities. In 2015, there were 738 attacks, which resulted in 4,600 fatalities. Attacks have increased over 200% over that period. South Africa's National Treasury found that the South African president should pay 7.8 million rand, which is $510,000 or thereabouts, for non-security upgrades to his Klandla home. South African oil share fell 3.08% yesterday. It's down 1.2% year to date, having been positive for quite a while. Dollar rand, bit of no man's land here at 15.2058. Egypt begins talks with the IMF over a $5 billion loan, minister says. Egyptian EGX30 down 1.46% this year. Nigeria all share dropped 2.63% yesterday, but it's up 4.19% so far this year. And of course, that's on optimism around the devaluation. Ghana Stock Exchange is down 10.89% this year. Naspers freezes African pay TV prices as customers feel cash crunch. Weaker currencies, lower economic growth, and commodity exporting economies such as Angola, Zambia, and Nigeria have hurt business, said Chief Executive Bob Van Dijk. Currency decline has been massive, and that has really hurt us because we bill in local currency. This is not the case in its home market, South Africa. Naspers has lost around 288,000 subscribers across the continent. That's a big hit. Fish firm says 10 billion shilling Imperial Bank letter was a work of trickery. Tilly claims in court filings that Imperial Bank's directors tricked it into writing a letter to the Central Bank of Kenya 3 days before the Imperial Bank was placed under receivership, in which it admitted to receiving 10 billion shillings and expressed a willingness to refund the colossal amount. The fish processor says Imperial Bank's directors only mentioned that it would be a letter of comfort to the Central Bank of Kenya, which had begun an in-depth investigation into the lender. Imperial Bank's receiver manager, while filing the suit against Tilly and 12 other companies to recover 34 billion shillings, $340 million, that is, looted from the lender, said that the fish processor was ready to return what it received from the collapsed lender. But Tilly now says Imperial Bank's directors intentionally misrepresented to it that the letter would have no legal impact, yet it was part of a plan to implicate the fish processor in the murky scandal. I like this picture that's posted by David Yarrow of elephants in the Amboseli, and I'll put up a photograph of a zebra crossing in the Amboseli that I took. Kenya shilling 101.35. Nairobi all share down 3.55% this year and a 4-month low, fell 1.02% yesterday. NSE 20 fell 1.19% yesterday. It's down 9.37% this year and is now at 4-month lows. 4-year lows, excuse me. This was my opening gambit in yesterday's closing comments. Like rabbits trapped in the headlights, international markets remain transfixed. by the Brexit aftermath. UK politicians were seemingly stupefied over the weekend and AWOL. Sterling sank to a fresh 31-year low Monday and was last trading at 131.72. A fresh 31-year low. That was yesterday. It's now at 133. So quite a meaningful bounce it underwent. Sterling's moves Friday and Monday ranks with the Mozambique Metical collapse of more than 10% on a single day this year, and the Rand flash crash, which saw the Rand fall by a similar amount in the blink of an eye. In the UK, shares of Royal Bank of Scotland, Barclays, both fell more than 10% in particularly volatile trading. Credit Suisse, my place of first gainful employment, hit another record low. European banks have lost more than a third of their value this year. Stock market was not able to stabilise after taking a big hit Friday when the all-share fell 1.63% to a 4-month low, and the NSE 20 fell 1.02% to a 47-month low. Nairobi all-share fell 1.45 points, NSE 20 slumped 44.29 points. Safaricom, unable to buck the downtrend, eased 0.86% to close at 17.30. It's up 12.26% this year, so it's still doing rather well, but has corrected 6.73% off a record closing high, which was reached just last Monday, a week ago. Kenya Airways up 3.571%, talk of Qatar and other suitors has lifted the price. Barclays, whose parent suffered such a torrid session at the London Stock Exchange, retreated 1.02%. It's down 28.3% this year, quite a dramatic drop. Equity was very active. That's minus 3.75% this year. KCB, big oversold position here, closing at 34. Big, very oversold, worth a buy. Mumias, which has badly lagged the raw sugar rally in 2016, firm 3.85%. Once again, thanks for stopping by.